Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines this afternoon. Indian markets trade in a narrow range. The Nifty hovers around the 10,400 mark. Mid-caps take a back seat with the index trading in the red.
Axis Bank is the top Nifty gainer after the board accepts Shikha Sharma's request to cut her new term down to 6 months from 3 years.
The Air India divestment process may be in jeopardy after Indigo Jet Airways rules out bidding for the national carrier.
The government will roll out the e-way bill mechanism for intra-state movement of goods in 5 states from 15th of April. All right, we'll get to all of that in a moment, but quick check on how the markets have been faring. Some strength across the board, led largely by banks. Neeraj is here to tell us what's going on.
Yeah, well, Axis Bank leading the way, Asha, you're right. So that's kind of paving the way for the markets doing well too. Private banks, by and large, actually the last few days have not done too badly. So Axis is up about, 4.5%. But if you just look at the Nifty Private Bank Index month to date as well, I think it's a fabulous move. By and large, the market read positive, India VIX off. So, I mean, the mood is a lot more positive than what it was maybe at the start of the month. But private banks and Axis Bank ruling the roost. Commodity names doing extremely well. So the aluminum prices firming up, really leading to Hindalco, Vedanta, Nalco, all of them logging in gains. Mind you, all the stocks are off from where they were at the start of the trading day today. The Nifty itself, which was up about close to 0.5% at a point of time, is now about 0.2%. So it's come off from the highs of the day for sure, but still trading in the green. A surprise move is what's happening with sugar. Couldn't quite figure out, not that the prices have rallied, couldn't find any announcements with regards to extended ethanol offtake or otherwise, but all the sugar names are bouncing back from the kind of levels that they were trading at. So let's see if there's a dead cat bounce or otherwise, but there's a decent move in the sugar names. And last but not the least, Avenue Supermarts. This one continues to surprise all purists. The valuation sky high and they continue to remain so. So another 2.5%, another new high for Avenue Supermarts.
All right, thanks so much for that, Neeraj. That's market check. And as Neeraj said, Axis Bank still in focus. It's not every day that you see the CEO of a large private bank step down and nudged so by the Reserve Bank of India. Well, the news is already out. Shikha Sharma exits in December 2018, by when the board will have a successor in place, internal or external. Just giving you a backdrop to this entire story, as has now been reported by the Economic Times and followed up by a number of other agencies. The Reserve Bank of India had delayed the approval to Shikha Sharma's reappointment. Concerns or questions had been raised about whether she was the best choice, and the board was grappling with how to deal with that. Why did the RBI raise these concerns? I think the numbers are all in public domain, but questions could be raised about the kind of growth and then the asset quality that Axis Bank had seen. And if you look at just the numbers, comparative numbers of what 2009 looked like for the bank and what 2017 looked like for the bank, you get a fairly decent sense of where things went wrong. That is, just the growth in loans. You were under 1 lakh crore when Shikha Sharma took over. You saw very rapid growth, particularly in the years when corporate loan demand was very high. Axis Bank went into it headlong and then paid the price. The next chart tells you what the price is. It's the surge in total NPAs that you have seen. You were at 4,000 crore even in FY15. And from there, now actually you're even above that 21,000 crore number. You're at 25,000 crore. Of course, Axis Bank will argue, and there is justification to that, that in terms of the percentage of gross NPAs at 5.28%, they are below a lot of even private banks like ICICI Bank, for instance, is at 8%. And of course, the public sector banks are an entirely different kettle of fish. So Axis Bank's deterioration has come against the backdrop of a broader problem in the economy and in the banking sector. But still, shareholders of Axis Bank are fully justified in asking questions as to whether the bank's strategy went wrong and then whether somebody should pay the price for it. Apart from the asset quality issues, there have been operational issues that have come about as well, and naturally all of that gets clubbed together in judging the management's performance. In particular, in 2013 there were 3 banks, ICICI, Axis and HDFC Bank, which were hauled up for concerns raised after the Cobra Post expose. But more recently, Axis Bank has had specific problems during demonetization. There was allegations of money laundering being routed through some of the Axis Bank branches. branches, particularly accounts of bullion holders. Following that, the Reserve Bank of India has revoked Axis Bank's license to import bullion. That news didn't get enough attention, but it was a major issue for the bank. And then, of course, there were smaller issues like leak of price-sensitive data through WhatsApp. Other banks were also pulled up for that, but Axis Bank was among those as well. So net all put together, I think it all came down to, you know, whether Shikha Sharma needs to take the blame for all of this or not, and it looks like she has. But of course, banking analysts are now looking forward, as they always should.
They are looking out of the opinion that a credible successor to Shikha Sharma is crucial for Axis Bank in order to end its battle with bad loans. Ameya Karve of Bloomberg News has been speaking to a bunch of them. Ameya, today you've seen the stock move that's clearly suggesting that the market is taking this positively. What's the market saying?
Yeah, so two things here. One is, you know, they need a credible and competent successor. And the other thing that they're focusing on is whether it will be an internal candidate or someone from outside. A lot of analysts are pro an outside candidate because what he or she offers is a fresh set of ideas. And currently what the bank is struggling with are very, you know, inherent issues. So maybe a fresh bunch of ideas may help the bank in settling out all those issues that were mentioned earlier.
Okay. You know, Nomura has put out a note talking about the possibility of Kotak sort of being in the race for Axis. This has come out in the past as well. Is that doing buzz in the market right now? Yeah,
Nomura in fact has given all the hypothetical analysis as to how it is a win-win bid for both of them. The one question that they, the one point that they argue is like, you know, or come across with is, you know, there's a, the time is very ripe for Kotak to get into Axis now because we are looking at almost all the top management getting a vacuum over there, and plus the RBI challenging and questioning, and all those bad loan issues. Almost, you know, every bad news is now known. So Kotak, I mean, has a lot of great chance to, you know, do its due diligence and come up with a target. And they have also given all the numbers as to, you know, even if they buy the bank at this price, it will still add 40% to their EPS from here. So all the odds in favor of Kotak. The only thing is, you know, all those regulatory issues, like all these things will need RBI and a couple of other regulatory approvals. But what Nomura is saying is it's a right time for Kotak, it's the best opportunity rather for Kotak to get into Axis Bank.
I think in all of this, the issue is what the government decides, because remember, the government still holds a large chunk in Axis, and whether they can offload it to one entity or they have to do it through some sort of auction or open market process. So this is Nomura's call. Whether it happens or not is still a long road from here on. We will try and get you a market view, but Harsha, just, you know, one chart which sort of sums up from a market perspective the way perception of Axis Bank has changed. And this is the percentage of buy calls that the bank has seen over a period of time. So if you look at that, you know, over a 5-year period, you'll see there was a period when almost all calls from stock market analysts on Axis Bank were buy calls, and then over a period of time that is slowly reduced to less than half. If you pull up that chart, you know, that's one chart sort of sums up the way you have seen a change in perception on Axis Bank. Pull out the maximum. If you click on that maximum, or at least the 5-year chart, you'll be able to see a sense of how things have changed for Axis Bank. The green, which represents the buy calls, has slowly deteriorated and still only about the halfway mark. There was a time when I think all 100% of calls on Axis Bank were buy calls.
Interesting that we've seen how the markets have responded so far. We were just mentioning about how Nomura is talking about a possibility of Kotak looking at Axis, and that the timing of this may be ripe. A bunch of brokerages that Ameya has been talking to also believe that, you know, this might be the right time, or to look at the possible contenders of who could probably succeed Shikha Sharma. Could this be an internal candidate, or could this be an external candidate? Just one question though, Ira. You know, even though they have an external, let's say they have an internal CEO, or even let's explore the possibility of a merger, there's a larger problem as far as the bank book is concerned, isn't it? Yeah,
so I think the perception, or actually this is absolutely accurate, that at least 70% of that cleanup is done. I know we've all been caught on the wrong foot saying that the cleanup is over, and nobody you know, can with any strength say that the cleanup is over. But you can say that at least 70% of it is done. Now there are 2 or 3 tough quarters as you adjust to the RBI's new rules, as you take provisioning for the NCLT cases. But if you take out those 3 quarters, then perhaps if somebody comes in the December quarter, at least a large part of the cleanup should be done. And I think some of the brokerages have pointed that out as well. Let me put across some of those questions to Dhananjay Sinha, Head of Research and Strategist at MK Global Financial Services. Sir, good afternoon. Thanks so much for joining us. Sorry, we've had some technological issues getting you, but good to have you on the line. So what did you make of what happened yesterday? Did you, like many others, see this as a positive that, the overhang goes and you can perhaps start on a clean slate?
Yeah, exactly. I think this was an overhang, given the context that regulator had some doubts, and I think that was an overhang on the stock. I think with this decision, I think it is helpful in terms of the prospects of the bank, and you can have a new leadership there. You can have new business strategy, etc., that can be implemented. And as you were saying, I think a large part of the cleanup has happened. I would say NCLT 1 is maybe out, but I think people will start thinking about NCLT 2. We don't know, where a new leader comes in, what happens in terms of the deviation. So we'll have to look at that. But nevertheless, I think it's a good move, and I think a lot of overhang that has been there on the stock over the last few weeks, I think that goes away. So I think this is a positive development according to me. And I think it also, the important thing is to understand that from a regulatory standpoint, I think this is, I would say, one of its kind in the recent history, I would say, of 10, 20 years where such an action has been taken by the regulator and such an action has been taken by the bank. I think it reflects well in terms of the oversight of the regulator and
Sure. Dhananjay, just one question. There's one brokerage that's gone out and said that this might be the right time for Kotak to look at Axis. This is not something new. This has been speculated in the past as well. Would you reckon that this would make a good fit for starts? And second is, I was just talking to Neera about this. Whoever takes over, either a new CEO or or a merger, there is a problem as far as the bank's book, isn't it?
So I think the bank book is under stress. I think that is a known thing. So I think that part is broadly discounted. What surprises that we are seeing has been with respect to the deviation of the stressed assets. So and the provisioning that the bank has done. So I think that is a bit of the thing that has been there as part of all corporate lenders, be it ICICI Bank or Axis Bank. I think there has been similar kind of a situation. We are considering the asset quality should be better. Then RBI came up with deviation, etc., and hence there was an overpricing Axis Bank, and hence there is a sort of a correction for Axis Bank that has happened as these deviations have been disclosed. I think this is a book that will continue. So nothing changes with respect to the change in the leadership out there. I think with respect to the of Axis Bank being a candidate for takeover, I think that possibility is always there. I think with respect to Kotak Bank, they have been scouting for newer banks to take over, but I think that has been there. With respect to Axis Bank, I think there is a certain public sector bank kind of character also because of the SUTI stake that is there, which needs to be sold, and that ownership is with respect to the government. So I think that part also will need to be sort of tackled.
Sure.
We'll see. I would not want to speculate whether this will be a reality or not, but definitely this is within realms or reality and possibilities that are there.
Sir, just two questions. One related to the point you were making about is this a change in stance from the regulator? Now we don't know the exact details of the letter that were written by the regulator to the Axis Bank management, but on the assumption that asset quality was one issue that they has raised, then I mean Shikha Sharma should not be the only one, right? There are other banks, including private banks, where both asset quality issues have been fairly extreme, divergence issues have been fairly extreme as well.
Yeah, I think, with respect to, I think that's absolutely right, because if you look at the letter or the on the lecture that Dr. Urjit Patel made on books. And he had made very clear differentiation between how PSU banks and private sector banks are managed, and regulatory oversight on private sector banking is supposed to be more rigorous versus PSU bank is the point that he has made. So essentially, with respect to Axis Bank and all other corporate lenders such as ICICI Bank, it will need to be very evident from regulatory standpoint that right kind of measures were taken, and the regulator has been able to convince the board that there has to be a change in there is an influence on the management when there is a sort of underperformance by way of business growth or asset quality or other kinds of stuff that is coming around. So I think it is a very important occasion for the RBI to reinforce, especially the governor when he's actually making a point that the regulatory oversight of the regulator on private lenders are stronger. So I think the RBI will have to demonstrate that it is actually reflected in its deeds. So I think that is a very important aspect in my judgment.
Sure. Dhananjay, Shikha Sharma took over again during fairly tumultuous times for Axis Bank. And she came in as an outsider. Who do you think should succeed Shikha? Should it be an insider, or do you expect someone from outside to come in again?
So I would not I think as a general rule, if there is a legacy issue with respect to the bank, and hence if there is a fresh blood that comes in and a fresh leadership that comes in, I think it would make a lot of difference, because otherwise the legacy on. So if the regulator thinks that there has to be a fresh leadership that needs to be introduced, I think that should be the case.
Okay. So just one last question, this one pertaining to actually just switching focus to ICICI, because the overhang there has not gone away.
Yes.
How are you approaching that? Because, CBI seems to be continuing. Some reports suggest that institutional investors are worried. What is your take on ICICI, sir?
So I think, whatever regulators come up with, that will be important. I think the bank should actually do an independent verification of what has been claimed. I think the management has been, the board has been supportive. They are very clean. They should actually do an independent investigation and bring out the reality. I think if that is the case, I think it should actually be a good thing for the bank. Per se, I would say that this is an issue. Is a charge of nepotism. I think that will need to be investigated. Beyond that, I don't think this is like the Nirav Modi case. So I think there is a clear distinction between these two instances. And if the bank is able to come out clean, and if there is independent investigation that happens, and if the CEO allows that independent investigation to happen, I think it's good for the bank. Otherwise, I think the bank is fairly capitalized, and I think it should grow over a longer period of time. So if you look at 2 years or beyond that, I think the bank should sustain. So I think with respect to ICICI Bank, if there is a change in the way the bank functions, the whole management of the bank, I think it will be a good thing for the investors.
All right, Dhananjay, we'll leave it there. Many thanks for joining us. That's Dhananjay Sinha talking about both ICICI and Axis Bank as well, and what these developments really mean for the stock. But there's been another one development too. Rana Kapoor talking about stressed accounts deadline, or rather leadership in private banks. Yes Bank is considering the reappointment of Rana Kapoor as Managing Director and CEO. The board will meet on 26th of April to consider a 3-year term for Rana Kapoor that starts 1st of September.
All right, back to the stressed accounts story. The deadline is nearing for the first list of 12 accounts that the Reserve Bank of India had asked banks to refer for resolution under the Insolvency and Bankruptcy Code. Vishnath Nair, excuse me, is here with us to give us a status check on how things are looking. Are we progressing, Vishnath? I know we focused on SR as as the main point, but there are other accounts.
Yeah, there are a few cases who sort of take the attention away from the rest of them. But of the 12, to be fair, there's been significant progress. In 5 cases at least. There's Bhushan Steels, there's Jyoti Structures, Amtech Auto, a number of other cases. These 5 cases, the COC has approved the plans that have come, the resolution plans that they deem are best suited for whatever they think is a viable return or a viable haircut on that company. They have then sent these cases to the NCLT for a final nod, because only after the NCLT's nod will the resolution plan go ahead. Tata Steel with Bhushan Steel, so that is one case which is being heard in court. The problem, though, is that there's been litigation that has been continuously delaying a lot of these decisions. So, for example, in cases like Bhushan Power and Steel, wherein Liberty House came in and said that they want to bid, even though they did not bid within the deadline. So they went to the NCLT. That case is still pending under litigation. Essentially, there is an order that is reserved with the NCLT that has not come out yet. So till that point in time, nothing can happen in the case. Similarly with Bhushan Steel, even though Tata Steel's plan was accepted by the lenders and it was all hopefully getting over with, but a 45,000 crore a number, which was a very big number on offer by Tata Steel. L&T came in the picture and said that they want to be rated higher in terms of whenever creditors are being listed, operational creditors are being listed, they want to be considered as secured operational creditors. Similarly, the employees at Bhushan Steel came in and said that Tata Steel cannot take over the company because there is a litigation that is pending against them. Section 29A does not allow them to win a bid. Electro Steels, again, big case which was resolved many months ago in terms of the lenders having approved a resolution plan. But the case is still pending at the NCLT because the losing bidder went ahead and said that Vedanta cannot apply because there are some cases pending against them. So, some matters like that, obviously delaying the process by a few weeks, maybe a couple of months even. But significant progress in terms of at least lenders coming on the table and saying that this is a deal that we can go ahead with and this is the level of haircut that we can go ahead with. Steel accounts, we're seeing pretty good returns for the lenders, very small in terms of the haircuts that are being taken are significantly lower than some of the other accounts. Accounts like Amtech Auto, wherein there's very few assets as such, they are looking at like a 75-76% haircut. So obviously in steel cases that number is sort of the reverse. Lenders are getting a bigger return on those assets. So this is how it's largely progressing. From the looks of it, about 8 accounts of the 12 that were listed, 8 accounts are coming up for the 270-day deadline this month. So SR on the 29th, that's probably the last, but a couple of them coming up in the next couple of weeks. So we have to see whether those cases actually get closed before the end of April and the resolution plan is implemented in those companies. That's something to watch out for.
Okay, but 5 is where and those were on your screen, 5 is where the resolution plan has been approved. So that's 5 out of 11.
That's right.
All right, that's not a bad run.
Rishi, thanks for that. Aviation, government's largest privatization plan, that of Air India, may be in jeopardy after Indigo. Jet Airways has now opted out of the race. In a statement released today, Amit Agarwal, Deputy CEO and CFO Jet Airways, said, and I quote, "We welcome the government's move to privatize Air India. It's a bold step. However, considering the terms of offer in the information memorandum and based on our review, we are not participating in the process." That's Amit Agarwal, Jet Airways Deputy CEO.
All right, the structure of the Air India sale process is one reason that Indigo and Jet Airways may have stayed away. But what about other airlines? Are there other potential buyers out there? And if not, what does this mean for the Air India sale? Amber Dubey, partner and head of aerospace at KPMG, believes the government may be forced to rework the bid design. Listen into a bit of what he told us earlier this morning.
I think it was a bold decision by the Modi government to go in for Air India privatization. This is something which we've been shouting from the rooftops for almost a decade now. But it's especially this morning's news that Jet Airways is also officially pulled out is a little disappointing, and it puts the whole exercise into a bit of a jeopardy. We still hope that somebody comes and takes over Air India, or the government may decide to simplify some of the bid conditions which the industry finds challenging.
That's interesting. Would you I mean, so while Indigo didn't explicitly say that, but a lot of conversations, Amber, seem to suggest that the government maintaining some stake in the entity could well be a thing that could put off potential suitors. I'm not saying Indigo had that reason or Jet has that reason, but is that a potential condition which will not work for a suitor?
I think, Neeraj, there are a whole host of things. I'm not authorized to get into too much of detail, but yes, a government stake of 24% and various other conditions, like you have to keep Air India at arm's length. You have to do a mandatory IPO after some time. I mean, there are various challenges. There's also on the shareholding pattern, you have to freeze the shareholding pattern at the EUI stage itself, wherein people haven't even seen the data room. Then, of course, there's this big looming pressure of the debt of 33,000 crore. I mean, this is not a joke. I guess the last part is also about the manpower issues, because people want a clean sheet. Nobody wants 10 to 14,000 people coming in when you may not require all those people. Plus, there is a big work culture difference. And tomorrow, I mean, aviation is so sensitive that even 10 pilots or 10 ground handlers can shut down an airport for an airline and cause havoc at the airport. So here, the power in the hand of an employee is so high that if you pass on all the employees rather than the ones that the winning bidder wants, I think we are creating problems. So I guess on the debt, on people issues, on the operational freedom, this whole IPO business, this government stake, I think the bid design has many challenges which need to be addressed. We just hope that the government does it so that at least the big two come back into the fray, and after that let the best team win. The
decision to club all the assets together, to your mind, has made it a little bit more challenging, or do you think that was required in order to get the best value for the airline?
Well, Ira, there could be different views on the same subject. One airline wants only the international routes because that's where you get the slots. Domestic, I mean, most of the big players have enough capacity and a network, so it will be a lot of duplication. There could be two flights from two airlines landing within 15 minutes of each other. That doesn't give you much of an advantage. But on the international side, yes, you get slots in constrained airports like Dubai, London, and various other airports which are not normally available. And also the pilots and commanders, because they are in short supply, especially on the international routes. It's not easy to get commanders these days, and they come in very costly. So there are certain advantages because of which people were looking at only the international side. But I guess from the government side, to split domestic and international would have been a disaster, because on the domestic side, then who's going to buy the domestic part? That's number one. And number two, on this AI SATs, yes, I guess it still makes sense because they're still present at 5 leading airports. It's a Singapore managed company with Indian staff. So yes, that adds to the sweetener. So I guess this whole bundling, I'm sure a lot of intelligent minds would have thought through this. So I would support this bundling.
That's Amber Dubey from KPMG talking about Air India. The GST regime, meanwhile, is poised to hit another milestone. The government will roll out the e-way bill system for intra-state movement of goods in 5 states this Sunday. Nikunj Ori now joins us with details on more on this one. Nikunj.
Starting April 15th, movement of goods within 5 states would need generation of an e-way bill. Remember, the government had decided to roll out the e-way bill mechanism for intra-state movement of goods in phases, and has shortlisted 5 states in its first phase. These states are Karnataka, Andhra Pradesh, Telangana, Gujarat and Kerala. Remember, in Karnataka, since there's already an e-way bill mechanism in place, movement of goods within Karnataka would also need generation of an e-way bill. So from April 15th in all, there would be 6 states wherein a movement of goods within these 6 states will need generation of an e-way bill. Over to you.
All right, thanks so much for that, Nikunj. We'll slip into a quick break. Coming up, there are signs of trade tensions easing between the world's 2 largest economies. Both the US and the Chinese are hinting at a possible compromise. That's coming up.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, no, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. La.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back on lunch, the headlines at this hour. Markets trading in a narrow range. Nifty hovers around the 10,400 mark. Mid-caps take a backseat. The index trading in the red.
India's bonds are trading lower with yields trading higher this afternoon. Concerns about whether the rally will last.
Gold imports in India slump in 2018. Bloomberg learns that the purchases fell 47% in March.
And US President Donald Trump hints at a deal with China that diffuses trade tensions.
Before we get to that, a quick check on how the markets have been faring. Bank stocks, particularly Axis Bank, have been doing well in trade today. Agam is here with a closer look. Agam.
As many were expecting, we're looking at range-bound moves when it comes to the benchmark indices, starting off with the Nifty, which has been hovering around between 10,350 and 10,450. For now, of course, just shy of the 10,400 mark. The same for the Sensex, marginally in the green. Broader markets are, well, we're looking at mixed cues there, while the small cap index is trading marginally in the red. We're looking at 0.2% advance in the mid-cap index. Again, we were looking at very average turnover with respect to cash markets. So, if you consider the BSE and the NSE turnovers, the standard a little less than 20,000 crores. Again, F&O, nothing much to speak for, a little over 3.3 lakh crore. Again, what's really leading the markets right now is the metal stocks, which are doing very well on the back of Hindalco as well as Tata Steel. And of course, as Harsha just mentioned, we're looking at, a little bit of resurgence in Axis Bank as well as ICICI Bank, which is lifting not only the Nifty Bank Index, but also the private sector banking index. And we'll just have to wait and watch whether or not we continue to see this strength as we move into the latter half of this session. But for now, consolidation as far as the benchmarks go.
All right, thanks so much for that, Agam. Let's move on to bonds. Bond yields are once again trading higher this morning, despite a number of the concerns getting alleviated. 733 on the benchmark 10-year bond. Karthik is here with us, giving us a sense of what's happening in the market, but also whether traders are buying into the rally, Karthik.
So what's happening is that, state-run banks who are the biggest holders of such securities, they have been consistently selling bonds. So if you look at the trading over the last eight days, out of 8 days, on 6 days, they have been net sellers, and till now they have been they are settled with very huge mark-to-market losses, and so they are using this opportunity to recoup some of the losses that they had booked in the last 7 to 8 months. So it's mainly the state-run banks turning net sellers in the last 3-4 days, in the last 6 days, that is weighing on the bond market.
The profit booking is inevitable, but is the market anticipating this volatility to continue in the near term?
Absolutely, that is a sense that we are getting. Like markets are believing that while the government has cut down the borrowings for the first half, its expenditure requirements, its expenditure for the first half and for the whole year remains huge, and the government needs money, and So there's a concern that as they go ahead in the second half, they may come back to the market and raise bond sales. So that's a big concern that the market players have. And another thing is RBI. You would remember that they lowered their inflation forecast for the first half and the second half. Some people have begun to doubt that as well. They say that RBI flagged concerns for inflation, then there was actually no need to cut down the inflation forecast. So that is also playing on the minds of investors and adding to the nervousness of bond investors.
Karthik, we leave it there. Thank you so much indeed for joining us. That's what's going on in the bond market. Let's move on now. The fears of an all-out trade war between the US and China are receding. Donald Trump expressed optimism that the US will be able to reach a deal with China that diffuses trade tensions between the world's two largest economies. Xi Jinping responded saying that China would increase exports, expand protection to intellectual property, and a couple of key concerns raised by President Trump. What does this mean for the global economy? Tom Orlik of Bloomberg Economics now joins us from our studios in Beijing. Tom, thank you so much for joining us. You've been tracking this very closely. What did you make of Xi's comments specifically on a sort of cooling off the tensions, as it were, and his talk about opening up the economy?
Yeah, I think Xi Jinping clearly went to Boao with the objective of dialing down the tensions on trade with the US, and our early read is that he succeeded. There wasn't an awful lot of new substance in his remarks, but the tone was very clearly conciliatory, and he packaged together a set of recent announcements on market opening in a way which made a convincing case that China was moving to address the US's major concerns. So after that speech, we saw a little bit of the tension come out of the markets. Asian equities were a little bit stronger, especially China equities. The yuan strengthened a little bit on fears, on reduced fears of a competitive devaluation.
Specifically on sectors where he's said he's committed to opening up, Tom, do these, I mean, whatever she said, do they sort of allay the concerns of the United States?
Yeah, so I think if we look at the interests and concerns of the United States, let's start with finance. Clearly, the US has a huge competitive advantage in terms of the investment industry. China is now saying that it's going to open up its financial sector. So that's a win for Wall Street. Xi Jinping also repeated the commitment to open up the auto market, reducing tariffs, reducing the barrier to foreign ownership. That's also a positive for the US auto sector. And then, of course, another major concern for US firms is intellectual property protection. Xi Jinping didn't offer any specific details, but he did make a clear commitment that the IP of foreign firms would be protected. So not a lot that was incredibly new. We got that financial sector announcement back in October. The auto announcement we had a couple of months ago. IP is a repeat of an existing pledge. But packaged together, it certainly looked like an attempt to address the major US concerns.
Last week, Bloomberg News had a report about how the next salvo from President Trump could be on the foreign exchange policy side. You didn't hear much on the yuan from Xi, did you?
No, nothing from Xi. I mean, Bloomberg News had an incredible scoop yesterday suggesting that China's policymakers were considering or reviewing the possibility of yuan devaluation as part of their tactic in a trade war. That's certainly a possibility. Our view, though, is that it's probably a pretty remote possibility. China had a pretty unpleasant experience back in 2015, 2016, with a weaker yuan causing crippling capital outflows and really posing a kind of an existential threat to the stability of China's economy and financial system. We think that trade relations would have to deteriorate an awful lot from where they are now before China would be prepared to revisit that kind of problem.
Tom Orlik, we leave it there. Thank you so much for joining us. Tom Orlik, economist from Bloomberg Economics, joining us from our studios in Beijing.
All right, meantime, the strictest US sanctions yet on Russia has sent aluminium prices soaring on the LME. This is because sanctions on the world's largest aluminium producer, Rusal, can disrupt the supply situation globally. Brokerages expect, however, that this move could actually benefit some Indian companies like Hindalco. Nikki Mirchandani joining us with what these analysts are saying this morning. Nikki.
Thank you, Veera. So there has been LME aluminium prices have risen as much as 7% in the last 2 days after there has been a shutdown. US's import sanction on Rusal that might result in supply disruption, as you just mentioned. Now, Rusal accounts for nearly 14% of your overall global production. That might have some bearing on the prices of the commodity that you're witnessing right now. What brokerages have to say on this? Edelweiss Security says that LME aluminium prices are expected to hold up going forward from this level on account of the supply disruption, aluminium cost pressure and lower inventories. It says that Hindalco is expected to benefit from this move given its integrated nature of domestic business. Also, it says that Novalis, however, might face some pressure on account of this because it might not just be able to also go ahead and pass the cost pressure which alumina prices are seeing right now. Now remember, alumina prices are key raw material for aluminium, which have also surged a good 25% in the last 1 odd month. It also feels Vedanta is expected to benefit from this as it will be able to pass the amount of cost pressures to its to the end users. Kotak Institutional Securities has done an impact analysis or sensitivity analysis on this, says it's going to be a positive development for all of them, but the impact of this is expected to be higher on Nalco as compared to that of Hindalco and Vedanta. For every 1% change in the commodity price of LME aluminium, we're expecting a 2.5% EPS change for Hindalco, 1% for Vedanta, and nearly 5% for Nalco. Back to you guys.
Okay, thank you for that. From aluminum, let's talk about gold. India's gold imports nearly halved in March. Bloomberg learns that shipments plunged 47% to 64.2 metric tons in March. Swansi's here with more details on the story. Swansi, what's been the reason?
We saw last year that there were like a huge spike in imports, up to 60% up, just because, you know, there was a lot of uncertainty over the GST rate. And then we had a lot of loopholes that were exploited with the free trade agreement countries. So that has created like a lot of supply in the local markets, and that's why, you know, you have seen the decrease in imports. But at the same time, demand has been pretty weak as such. And then you add to that the rising prices because of what's happening globally. Imports have been on the decline.
All right, Swansi, good news there from the macro standpoint and the export-import data standpoint. Let's move on. Commercial and two-wheeler sales continue to grow at a healthy pace in March, according to industry body SIAM's data. Passenger vehicle sales, however, lost steam. Yatin Mota is here with the key takeaways from the monthly numbers. Yatin.
Well, if you look at the consolidated SIAM data, the data is encouraging, be it the two-wheeler space or the commercial vehicle space. They have been growing in strong double digits. In fact, if you look at the FY18 passenger vehicle sales also, they showed a growth of nearly 8%. The passenger vehicle sales, however, if you look at it from a year-on-year basis for the month of March, were up 6.4% at 3 lakh units. The car sales also grew at a healthy pace, despite the fact that there has been some slowness in the overall market. So we had Maruti outperforming, total car sales coming in at 1.91 lakh units. Two-wheeler sales also saw good growth for the industry, growth coming in at 18.4%. And also, if you look at the important key trucks and buses segment, despite some weakness coming on account of lower government orders and state government orders, we have seen a healthy growth of nearly 24% for that segment, and sales for the trucks and buses segment stood at 1.08 lakh units versus a figure of close to 87,000 same time last year. So on an overall basis, if you look at it, two-wheeler sales and truck sales have been encouraging from the SIAM data point of view.
Yatin, thank you for that. Well, analysts have drawn up their list of expectations from different companies in the fourth quarter. Jayesh has gone through all of that to draw up a list of 10 listed companies that are expected to report highest margin expansion according to Bloomberg estimates. All these companies have at least 10 analysts tracking the stock. Which are those companies, Jayesh?
So Harsha, we've split this into two parts. First set of 5 companies, let's have a look at that. Now, Adani Ports, that is expected to show an EBITDA margin of 79%, which will be more than 1,800 basis points growth year on year, and even quarter on quarter healthy growth for that itself. Natco Pharma is the second company, 58% EBITDA margin expected, which will be a growth of 1,600 basis points year on year. The third company on the list is Coal India, which is likely to show an EBITDA margin growth growth of more than 1,000 basis points on a year-on-year basis. The other two in the top 5, if you can have a look at that. So ENIL is the fourth counter, where we are expecting a 628 basis point jump on a year-on-year basis, followed by Atul Auto. Now, what we have also done is, scan through a lot of brokerage reports and see why are analysts expecting the growth in EBITDA margin. Let's have a look at some of the highlights over there. So for Adani Ports, we have Edelweiss and MK Financial. Both of them are expecting, volume growth to lead the EBITDA margin higher. So Edelweiss is expecting 14% volume growth year-on-year, and MK is expecting 11% volume growth year-on-year. The second company, what are analysts expecting about that, will be Natco Pharma. Now, Edelweiss says that, the generic business, that is a high gross margin business for Natco Pharma, that will actually aid the margin. And Antique also says that, the generic business and along with the oncology business, that will actually aid the margins, along with the flu season that, just went by, that will drive the growth on EBITDA margin. If we have a look at the third counter that is there, so, we are looking at Coal India, and Motilal Oswal believes that it will benefit from the price hike and volume growth going forward. And Edelweiss says that there has been better offtake for the company, and the production also surged about 5% year-on-year. So that is the list of top 5 companies. ENIL, we do not get any brokerage reports because there are not many expectations over there as well. So what we can do for Atul Auto is Edelweiss is believing that margin expansion will likely be led by higher scale and the base impact of last year. So that is the top 5 list that we have. If we can go to the next 5 counters, we'll see which are the other players in the running. So you have VRL Logistics, which is expected to show EBITDA margin of about 13%. Now that will be a 350 basis point growth year-on-year, followed by CEAT, which will show nearly 300 basis points growth. And we have Dr. Lal PathLabs over there as well in the list. The last 2 counters that we have is Jubilant Life Sciences and Hindustan Zinc. Hindustan Zinc will report EBITDA margin growth of more than 200 basis points. That is as per the analysts which are tracked by Bloomberg. Let's have a look at what some of the analysts are talking about these counters. So for CEAT, what Edelweiss believes is that the stable rubber prices and pricing power that CEAT holds, that will aid the margins going forward. And if we can have the other counters as well, we'll have a look. So for Dr. Lal PathLabs, the analysts are expecting that, because Q3 was a seasonally weak quarter, that will actually, help in the EBITDA margins for Q4. For Jubilant Life Sciences, the better profitability in the life sciences businesses, Motilal Oswal is of the belief that that will help the EBITDA margin growth. If we can have look at the last counter, which is Hindustan Zinc, once again Motilal Oswal over here, they believe that the higher zinc and silver volumes will drive the EBITDA margin growth for the Q4.
All right, Jayesh, thanks so much for that. As tensions rise in Tamil Nadu over the Kaveri water dispute, the Chennai police has stepped up security for tonight's IPL match between Chennai Super Kings and Kolkata Knight Riders. Quinn Smitha TK tells us the latest developments on that front.
Protests have been intensifying in Tamil Nadu over the Kaveri issue. In the last few days, several film personalities and political leaders have come out saying that IPL matches should not be conducted in Chennai, and even if they are, the player should sport a black badge as a sign of protest. Now even superstar Rajinikanth has come out saying that such a gala event should not be conducted while people are agitating for such a cause. A fringe group has even threatened the players and warned of picketing the stadium during the match. Now fans are quite divided regarding this topic. The security has been beefed up at the stadium and detailed instructions have been given to fans who are attending the match today. So will the show go on, or will fans hold a flag of protest? We will have to wait and watch.
Okay, that's the IPL and the politics surrounding it. Indian shooters, meanwhile, continue to shine at the Commonwealth Games being held in Australia. 28-year-old Hina Sidhu won the gold in the women's 25-meter pistol shooting event. She also made a games record by reaching the 38-point mark. Hina also had won the silver in the women's 10-meter air pistol on Sunday. India's medal tally stands at 20 with 11 gold medals.
All right, a Japanese government-backed research group has put forward rules that may give initial coin offerings regulatory definition and approval. An ICO is a means of raising capital by issuing and selling crypto tokens in exchange for cryptocurrencies like Bitcoin. They are fairly popular with blockchain startups in particular as a means of raising funds. Here's how the further adoption of ICOs could affect the system.
Out of time on the show. Thank you so much for watching.
Countdown is up next.
Sir, please believe me, I am in this business for the last